So today we had this split of Tesla and Apple, and I really wanted to express my bearish opinion by taking out a put spread. Sat on my hands because I did not see an entry that I liked. I couldn't make the numbers make sense. I just had to use discipline and take no trade if none made sense. But we'll come back to that. What I wanted to talk about is why people should use the monthly options instead of the weekly options if you're going far out. Now, if you're trying to get the cheapest options you can, weeklies are probably going to be the best bet because they are going to be the cheapest. Doesn't mean they're the best because a lot of those are going to expire worthless. But if you're going to go out to, let's say, a month, 2 months, or more, just take the normal monthly expirations. So let me show you what I mean. Using Thinkorswim platform, this is how they break down the option chain. Now, it's going to be different on Robinhood, going to be different everywhere, but you can usually see in parentheses the weekly designation. And see, we got two different Octobers out here. One's for October the 9th, one's for October the 16th. And we're going to have the same strike price. There's going to be a difference in prices, but look at this right here. So even in Apple, which is extremely heavily traded today after the split, you've got about a 25-cent spread here on the 128.75, kind of bounces back and forth. But here, same strike, but on the monthlies, you have just a 10-cent spread, the spread between the bid and the ask. Now, why that's important is because to get in and out of the trade, let's just say that we wanted to buy this right here. We could buy it at the ask for 9, but we're paying more than we need to. What we'd want to do in this case is like at 8.95. That's going to put us in the middle of that spread. Now, whether we get that or not doesn't matter, but that's a difference of about $5. Whereas here, it's going to be a difference of about $25. And remember, you have to find the midpoint to get into the trade if you want the best price. And you have to find the midpoint to get out of the trade if you want the best price. Now, if we look at Tesla, the spread here is going to be, $50, $60 on the monthly expirations. But here, it's almost a whole $2, more than $2. So you're giving up $200 just to take this trade. Now, of course, we're looking at like a $6,000 option, but it's still money that you're going to have to give up to the market makers to get in that trade. And you don't need to if you're going that far out. So someone in the chat asked, why is that? Well, let's take a look. So we're going back to Apple. What I can do here on Thinkorswim platform is I can go through the option times and sales. I've filtered this for just those Octobers. And we're looking at a quantity of 10 max. There's going to be a lot of ones here, but I filter out. But notice going through the chain here, all of these are for the monthlies. All these trades are for the monthlies. There's one trade for the weekly right here. This is just the last couple of minutes, but this is what people were trading. Notice also the size, 122. You'll see 1,000 lots coming through here. More people trade the monthly options, which makes them more liquid. 1,500, of course, are going to be in the monthly. These are institutional orders. Regular retail traders are not taking 1,500 contracts of Apple. People are probably at institutions, hedge funds, mutual funds, whatever. They're using the options to hedge their existing positions. They're going to use the monthlies because they're going to get better prices. And so if you're going to go that far out, take the monthly options because you're going to get better fills. You're going to get a better price. You're not going to give that money up to the market maker. It's going to help you getting in and getting out. So for just an idea of my thought process, I was trying to take Tesla, but I wanted to just take a play entry. I'm not trying to take a big position. So I'm not just going to go outright and buy a put. I was looking at a possible put spread. That way I can keep the risk low and still be able to have some skin in the game. So when I'm taking a put spread, what I want to do is I want to try to get a 3-to-1 on my put spread. I also want to take the monthlies, like I said, because they're going to be easier to get in and out of. And the spreads here are pretty big, but let's just say if we wanted to play this, let's say we took the 460, 450. Let's try to buy vertical and see 460, 450. It costs me $5. Now, the max of this spread is going to be 10 because it's 460 minus 450. I'm paying 5. I can only make 5, so that's basically a 1-to-1. That's not good. I don't want to take a 50-50 shot with my reward. So we got to go further down in strikes. So if I go down a few more, 440, 430, I'm still not getting that far to where I want to be. I want to be at 250. That way I pay 250 and I can make 750, 3-to-1. Even down at 400, still not getting it. Okay, so finally I'm close, 360, 350. That means that my minimum price I need to get to make any money on this spread will be 360, and my max profit will be at 350. So I've drawn it up. My minimum profit, the level where I make a penny, is getting below 360, whereas my max profit is 350. And actually, it's a little more than that because I've got to cover the cost of the spread to get down in here. So it's actually more like 360 minus 250. So my break even is 357.5. I got to get all the way down here. I have to have a 26% move down in 46 days to make any money. It's Tesla. It could happen, but I just don't think that's reasonable. And so that's why I'm sitting on my hands this morning, not trying to short this. I may be wrong. People could just be buying this because it's Tesla. But using patience, waiting for the market to come to me, is saving me from what would have been a loss this morning if I would have taken it any earlier. But again, if I was going to take it, I would take the monthly expirations, not the weeklies, if I'm going out that far. Hope this helps explain why you should do this. Save yourself a little bit of money no matter what you're trading if you're going longer term. We'll see you in the next video.